Mr. President, 7 years ago, Wall Street came closer to imploding than at any other time since the Great Depression. Wall Street had stacked the deck for themselves and against consumers by turning a banking system that in the past had helped families and businesses build their prosperity into a casino for Wall Street's own big bets. When things on these bets went badly, taxpayers were left holding the bag. While our economy has slowly returned, the memory of the crisis is fresh in the minds of American families. Millions of families who lost their jobs, millions of families who lost their homes, millions of families who lost their retirement savings. For this reason, there is broad support across America for not allowing the return of the Wall Street casino, with 9 in 10 likely voters saying it's important to regulate financial services and products to ensure that they are safe for consumers, that they are fair for consumers, that they are designed to build the success of consumers. Through the Wall Street Reform Bill, we ended predatory home lending practices. We stopped teaser rates, then had exploding interest loans. These are the loans that went from 4% or 3% in the beginning, and after 2 years would turn into 9% or 10%, ensuring that the family would be unable to make their payments. We stopped the kickbacks that went to loan originators to steer their unsuspecting homebuyer clients into high-cost loans. We stopped the liar loans that were designed to ensure that loans would fail just after the originators had gotten their commissions. In short, we've restored home ownership and home loans as powerful wealth-building tool for the middle class in America. Indeed, over the course of the post-World War II history, home ownership has been the most significant wealth builder for the middle class. Wall Street turned it into a predatory wealth-stripping experience, and we've restored it to ensure the financial success of working families. And we ensured that banks and financial institutions have skin in the game, mandating that they retain risk in the products that they sell. And we established the Consumer Financial Protection Bureau, or CFPB, to prevent scams from stripping wealth from our working families. You know, before we established the Consumer Financial Protection Bureau, consumer protection was handled by the Federal Reserve. The Federal Reserve also handled monetary policy. But you see, monetary policy was much more exciting. Perhaps they thought it was more up to their sophisticated educations to work on that. And they took consumer protection and they put it in the basement of the Federal Reserve. And they locked it up and they threw away the key. They never honored their responsibilities for consumer protection, allowing all of these predatory practices that we had to end through the Dodd-Frank legislation. To date, the CFPB has returned more than $11 billion to 25 million wronged consumers. That's a pretty impressive record. Show me something else that has brought a little bit of justice and a lot of financial restitution to 25 million wronged American citizens. The common sense reforms we established laid the groundwork for a financial system that is not premised on elevating the goal of quarterly profit margins on Wall Street, and that is not about the size of bonuses on Wall Street, but is instead about providing a foundation for our families to thrive financially and for our businesses to thrive financially. That's building the future prosperity of America. Now, nobody wants to repeat the financial collapse, the bailouts, the economic recession. We spent 6 years digging out of the hole that was created. But despite the fact that to return to that model would be so destructive to American families, there are, at this very moment, colleagues of mine gathering in rooms here in the Senate and here in the House who are preparing policy writers to return us back to those dark days. They want to add policy writers to the financial year 2016 appropriation bills that are designed to turn back these improvements that restored home ownership for American families, that restored a financial system that is right for small businesses. I wholeheartedly oppose attaching these type of policy riders to these spending bills. And I tell you this, the American people don't like it either. So, what is going on? Well, one conversation is to design policy riders to reverse the improvements we made in mortgage guidelines, to ensure that mortgages did build the wealth of the middle class instead of preying on the middle class. Second, there are conversations going on about policy riders designed to weaken the tools and authorities of the Financial Stability Oversight Council, or FSOC. Now, the FSOC is about this. During 2002, 2007, 2008, we didn't have anyone systematically looking at weaknesses in the system. Now, I remember looking at a chart that laid out the vast growth in predatory teaser rate loans that started in 2003. And as that chart surged upwards for those loans as a percent of all loans done in America, the number of prime loans came down just as dramatically. Now, we now understand why, because the originators were taking their customer and saying, oh, you don't want this prime loan, this low interest rate locked in for 30 years, you want this teaser rate loan. You'll get a little bit of a fraction of a percent lower in the beginning, never explaining to their customer that their interest rate was going to go up dramatically just 2 years later to a level that they wouldn't be able to afford. And yet that originator was getting undisclosed kickbacks. Now, I say this because had there been an FSOC in place, they would have been reviewing that chart and they would have been going, wait, what is going wrong? From 2003 to 2005, we have this huge surge in predatory lending. Why do we have this huge collapse of prime lending? They would have talked to the Wall Street Journal. Wall Street Journal ran an article, an analysis, a study that looked at this and said, you know what? Virtually all those folks who are being steered into these subprime loans qualified for prime loans. This is the essence of a predatory practice. Well, FSOC would have seen that and said something needs to be done. So that's why we have it, to keep looking at bubbles in our economy or potential bubbles in our economy or practices in our economy that are going to cause a future collapse and remedy these problems before they happen. So despite that, we have folks right now trying to undo the creation of the FSOC or disable it from being able to do its job. And there's another group that's gathering to try to undermine the success or ability of having a watchdog on the beat, the Consumer Financial Protection Bureau on the beat, ending predatory loan practices from here forward. You see, you can't just do it through a statute, because as soon as you outlaw this practice over here, another one develops over here. There's newly invented strategies to continuously find new ways to turn solid, successful financial products into predatory products, misleading products, gouging products, products that explode in a couple years that consumers were not fully informed on. So you have to have a commission to be able to stop those practices. It's the same thing as we have in consumer products. We don't have detailed legislation that says you can't design a toaster with this, 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 and this, and this. Instead, we have a Consumer Product Safety Commission that looks at it and says, oh, these new products are unsafe for these reasons, they can't be allowed. New products come in, they get examined, they make sure that they continue to have safe products. It should be the same for our financial products. So the CFPB has done an extraordinary job ending predatory practices and returning funds to ordinary working families. If you want working families to fail, then allow predatory products. If you want them to succeed, if you have a vision for America that involves the success of families, then let's end these financial wealth-stripping predatory practices. And that means the CFPB has to be able to do its job. So it'd be 100% the wrong direction to go to put these policy writers in the dark of night to dismantle these Dodd-Frank protections onto these spending bills. So the Senate Democratic Caucus is going to keep fighting for our American families. We're going to keep fighting for our American consumers. We're going to keep fighting for the success of individuals across this country and to ensure that the Wall Street casino stays closed. Thank you, Mr. President. And I recognize the absence of a quorum.
The clerk shall call the roll.
Mr. Alexander.